Good morning, everybody. Hey, welcome to Tuesday. It is the 13th of December. You got a week and a half to finish up your Christmas shopping. And we got Dave going to join us here in just a few seconds. Before he does, though, let's remember that in the world we live, there are a lot of things that you and we just cannot control. We can't control what's happening in Ukraine or Russia, or even what's happening in Washington, D.C. We can do our part, but we can't control it. However, within your portfolio, you can control the amount of risk you have, but you got to know how much risk you need to know where you stand. Give us a call at 863-382-0037 for our core retirement design that starts with our core retirement analysis. Again, that number is 863-382-0037. Give us a call now.
Light FM morning all. Hi, I'm Morning Dave. We're at 8:41 here now, 19 before 9. I must admit, over the last few weeks, I'm really tired of the notion of bemoaning good news for the economy. We have a good hot employment market. Everything is good for the people, but it has kind of made the stock market go. Well, this morning we actually have some good news that's good news for both the market and the economy, and we got Phillip Statler from Statler Financial Services on the line to discuss it this morning on finances. Phillip, good morning. How are you?
Hey, good morning, Dave. Hey, doing well today. I don't know about you, but counting down to Christmas. So, it's all good. And hey, I can't complain. Yesterday was just such a hot day on Wall Street, and maybe it continues today.
Yeah, I was wondering whether there was some leak on the inflation numbers. Yesterday, the Dow suddenly shoots up 529 points, the Standard & Poor's up 56, and the NASDAQ up by 139 points. I mean, when the Dow goes up 1.5+% in a day, you got to call that a good day. And it looks like we're going to do it again today in one form or another, doesn't it?
It really does, Dave. I mean, the numbers came out this morning, and I looked at 8:30. And man, the Dow had jumped. I mean, my delayed quote I was looking at had the Dow at like 230, and my actual time quote, in time quote, was up to 840. So yeah, a big jump after the news came out at 8:30.
It does sound that news we're referring to is the CPI, the inflation rate that we as consumers feel. And no, I mean, inflation is still too dang high, but they were expecting a 7.3% inflation rate year over year as of this morning, rolling average across 12 months. It came in at 7.1%, which, okay, fine, 0.2%, but you're talking about billions of dollars more than people expected to have in their pockets, which is always good news. 7.1% inflation is still too high, but it does at the very least show that it's getting a little under control. And the core CPI, they were expecting 6.1% year over year, and it came in 6, which once again, got to say it's all good news for the economy. And I alluded to when we first started this that I'm so tired of saying good news for the economy is bad news for the market. This is good news for both of them, right?
It really is. And the number that I'm looking at is, I mean, you're compared to the expectation, which is good, but I'm looking at the last month. Right. The last month, the CPI was at 7.7, and now we're 7.1. So that's a pretty significant drop, 0.6%. And the core went from 6.3 last month to 6% this month. So I'm thinking that the year numbers are making some headway in the right direction for all of us.
Absolutely. And like I said, it does give some indications that the interest rate bumps that the Federal Reserve has been sticking us with are now having some effect. The only part that you and I have been talking about all along is which one's actually doing it, the one from 5 months ago, 4 months ago, or 3 months ago.
Well, that's right. We still have those things in there. So, I got to think it's the one from, 5 or 6 months ago, right? Because that's how long it takes to really start to get into the economy, which means that the next reading, we should see it further down than where it is right now.
Absolutely. And the market is responding favorably. You mentioned about how big it was. I mean, I was looking at the late quotes and saying, well, maybe there's a leak. 500 points of the Dow up yesterday and another 260 up this morning. Maybe they leaked the inflation numbers. No, they got them, and they got real happy. Things are leveling off a little bit right now, but boy, it was party time on Wall Street for a little while in there, and it still looks like it's going to be, doesn't it?
It really does. It looks like this could be a barn burner day if it can finish as strong as it starts.
Absolutely. The other thing that comes into the equation, it probably doesn't move the markets, but it kind of informs things a little bit, is the National Federation of Independent Business put out their small business optimism number this morning at 6 a.m. And 90.5. Again, we always preface these by saying the absolute number doesn't matter; it's the direction they're going, because every single one of these indexes uses a different formula. But in November, it was 91.3. And it was only expected to be 90.5. In other words, they expected small business around the country to pull in their horns and be a little bit cynical. No, it actually went up 0.6% to 91.9, which again, tenths of a percent don't matter much until you look at an economy as big as ours. And optimism from small business people around the country is actually improving a little bit as well.
And that is good news because, the small business, I mean, the back of our economy is built on the small business. And so that is some good news that they have a pretty good outlook right now.
Understood. Conventionalists really are probably considering this good news too, because you and I have always kind of poo-pooed Bitcoin as a place to put money. You can't afford to gamble. The big Bitcoin FTX exchange owner, he'd taken hiding out in the Bahamas, figuring he was safe over there. They picked him up and jailed him, and he's showing up in court trying to fight extradition over to our side of the pond. So our friend Sam Brinkman is probably not going to be doing a lot of Bitcoin trading over the next few months.
Yeah, probably not. It's one of those things when you have the debacle that he created. I think that he's going to be in trouble for a while.
Can't help but getting a little bit of a giggle out of him telling authorities, "I screwed up. That's all."
That's all.
Yeah.
I didn't commit fraud. I just messed up.
Yeah, it wasn't fraud. It was just a screw up, and we'll let a jury decide where that boils down to. So overall, we're looking pretty good. We always check the interest rate differentials because that's always a good harbinger of things to come. I found a column from one of the big bank investment gurus saying that when the stock market goes one way and the bond says another thing, he says to go for the bonds. And I got to take note of the fact that the difference between the 2-year Treasury note and the 30-year Treasury notes, as of my delayed quote anyway, had tipped over 80 basis points, meaning you make 4.4% or close to it on the 2, and still only about 3.5% on the 30-year notes. That does kind of indicate there's still a conservative outlook on the economy looking forward, isn't there?
There is, and that spread has declined a little bit, Dave, down to about 0.74. But still, that spread is still a pretty significant when we look at where it is right now.
Absolutely, and a percentage difference on the two, because we are still relatively low on the absolute numbers, even though it's dipped below the 80 basis points that I see on my delayed quotes. It's still in the grand scope of things when we're talking about 3.5% and 4% interest rates, and we talk about 80 basis points between them. That's a big difference in yield, and it does indicate that at the very least the smart money is kind of saying what we've been saying for a while, that this inflation fighting effort that the Fed is going on, we're seeing the effect of something 4, 5, 6 months ago right now. What's going to be happening in March? Well, only time will tell, but I'm a little bit on the conservative side in terms of reacting to it.
Well, yeah, I mean, I think that, those interest rate hikes are going to eventually kick in. We're seeing that now, right? So how drastic it actually affects our economy, that's the unknown. And that's the thing that we really just don't know how much pressure and what it's going to do to the economy as those interest rate numbers start to kick into the economy.
Absolutely. On the short term, though, it is party time. Not a lot of reports because we've, pretty much in the third month of a quarter and 2/3 of the way through the third month of the quarter. But one of the big tech companies reported. How did Oracle do last quarter?
Oracle did good. They beat across the board on their top and bottom line. they're continuing to make some significant progress in shifting their business model from software on a server to software in the cloud. So they're moving more and more to the cloud based. And so they're up almost 4.75% this morning before the market opens. I want to mention this one too, because we talk about Boeing a lot off and on throughout the years. Boeing's getting a nice little bump today. United Airlines came out and announced that they're going to they placed an order for 200 jets, 100 of the 787 Dreamliners and 100 of the 737 MAX jets. So, it's a $43 billion order, not nothing to sneeze at there. That's got Boeing up almost 3% this morning.
I guess they're not going to have layoffs anytime soon, are they?
It doesn't look like it for sure.
Good to hear. So basically, everything seems to be coming up roses this morning, Phillip. 45 minutes before the real money gets thrown around. How are we looking this morning?
And we are still getting a nice little bump across the board. We got the Dow up 2.25%. That's like $770. The S&P 500 up 2.95%. That's $117. The NASDAQ 100, the big winner right now, up 4% right now, $468. The Russell 2000 up almost 4%. That's $72. So good news across the board there. As well in the silver market, man, oh man, up 3% this morning. It crossed over $24 to $24.12 an ounce. Gold back up over 1,800 at $1,823 an ounce. That's up 1.75%. Crude oil up 2% to $174.63. And I was telling Dave before we went on the air that I did see gas cash price $2.99 a gallon. Now I'm not so sure how long it's going to stay that way with oil prices going back up.
Yeah, well, 73.62 isn't all that bad. We'll take it compared to what we got used to a few months ago, right?
That's right, exactly.
Thank heavens for small favors. Overseas markets, Asian rim markets were fractionally up at the close this morning at 6 a.m., reflecting our yesterday. Europe is looking at us and saying, holy crud. Germany and France are both up by like 1.5%. British markets are also up healthily halfway through their trading day. This is all good news. If you're shifting your retirement funds based upon one day's good news, shame on you. You need a plan. How do I find you to make that plan and keep things on track, Phillip?
Then give us a call at 863-382-0037 to walk through our core retirement design, where we'll help folks design the retirement they always dreamed of. And then catch us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And back here again tomorrow morning at the same time on Light. Phillip, I do appreciate it. We'll see you in the morning, all right?
All right, man. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Folks, again, I want to thank you for joining us during this holiday season as we come to the close of the year. I mean, Santa Claus rally? Maybe. Who knows? Stay tuned, though. We'll talk about it every day to see where we are and where we're going. Again, thanks for joining us. I hope you'll join me again tomorrow. Same time, same place. Until then, have a great day.